Bryan Giles is with us. The company began trading today on the ticker symbol at the NASDAQ, AVO. Is it Giles or Gillis? I mean, let's just get it right.
It's Giles. You had it right.
It's Giles. Okay, good. Good to know. So we got that right. And now we'll get the rest of it right, too. Talking all about avocados. The stock is having a nice performance, jumping about 18%, sitting at $14.24. Why now? You're the chief financial officer. You bring it public and get a good reception, too.
No, it feels great. Today's really an important marker in our journey that began over 35 years ago. I'm proud of all the work that's gone into making us one of the world's most advanced avocado networks and really a leader in our industry. And today there's no one close, and we're looking forward to distancing ourselves even further from our competition as we go forward.
So how will you do that? Obviously, avocados have become so incredibly popular. Avocado toast, I think, is the choice for the millennials. I think it actually got put into the dictionary or somewhere that actually meant something. Tell me more.
We've seen tremendous growth over the last decade. I mean, we've seen our top volume growth and our markets grow 13% over the last 10 years. Consumption growth worldwide has been at 9% over that last decade and is projected to still grow going forward. So we're very excited about our opportunities here in the North American market on an ongoing basis, but we also have tremendous opportunities globally as well. We have the markets in Europe and Asia are a lot less developed than in North America, but they're growing at a very fast rate. I think we're well positioned to take advantage of that with our distribution network. And on top of that, we've invested heavily in supply and developing really global supplies to be able to support all of our markets on a year-round basis.
You talk about 9%, you said, globally, and the growth that you're expecting. What kind of growth are you expecting for demand
I think
purposes?
When we look, industry projections that we're seeing are showing projecting growth rates at about 6% for the next 5 years or so. We think that it could even be stronger than that. The industry is typically operated with supply constraints, and we think that as we continue to invest and work with third parties to develop more supply, that we can see that demand grow at even a faster pace.
So when you have your IPO today and you're looking at a business that has this growth potential, it also has a lot of challenges, because when you're trying to grow avocados on the farm and get them out and ship them out to wherever they've got to go, it's a very technical process. Everything from temperature to time, and availability is tough sometimes.
Absolutely. We have a calendar year-round where we're supplying from different countries of origin throughout the year to different end markets. So we're constantly managing those harvest windows to try to ensure that we have consistent supply for our customer base. Certainly we've been doing this for a really long time. We've been in our farming operations for about a decade now, and we're continuing to develop those going forward. I think we feel we understand the market as well as the farming side as well as anyone else. But having these multiple supplies worldwide from different source countries, I think really gives us flexibility and differentiates us from others if there are issues that arise that cause disruptions in one individual market.
So with 3,100 employees roughly in 25 countries roughly, how are you going to make money going forward? That's your job, right? The chief financial officer, you got to do the books. So where's the money going to come from?
Absolutely. It's going to come from a combination of sources. I mean, we really operate our business within two segments. We have a marketing and distribution business, which is focused on selling fruit through our channel. And the profits are going to come from increased growth. That's really our primary focus, is to continue to support that top line growth. There are opportunities for margin improvements along the way, and we're focused on some of those as well. But really, I think what's going to drive the success of the entity is going to be that top line growth profile. And in order to support that, we've invested heavily in our farming operations to be able to have that supply. Today, in 2019, our own production accounted for about 11% of the fruit that we sold. And the margins that we've seen historically are about 4 to 5 times higher on our own production than when we're buying and selling third-party fruit. And what we see over time with the farms that we already have in the ground is that own production will become a larger proportion of what we're selling. And that's really going to drive improvement to the bottom line as well.
Right. I mean, we all remember the days of the avocado shortage when we had to pay more at Chipotle for our guacamole. What's behind that? And are you going to prevent that single-handedly?
I don't know if we can do it single-handedly. We're making investments. We work closely with Chipotle to help give them constant supply of fruit year-round. Yes, we do. They're one of our larger customers.
Who else are your larger customers?
I think we're dealing with the tier 1 retail and food service customers throughout North America. I think we've listed Kroger is our largest customer across their banners, but we're dealing with the Costco's, the Walmarts, the Aldi's of the world. That's a sample of our customer base. But we're working with them to give them that year-round supply. I think when we see run-ups in prices at different times of the year, it's because there's been supply constraints that have impacted the market. And having these multiple supply sources, along with control over our own fruit, will help us smooth out that supply over the course of the year and help us prevent those peaks in pricing that we've seen historically.